In this video, we'll try to understand why is the rupee depreciating. Firstly, let's understand what drives exchange rates. Now, exchange rates in very simple terms is the price of a currency. Now, what drives the price of any commodity? That is the demand and supply forces. So if there is a loaf of bread and the demand really is more than supply, then the price of that bread would increase. Similarly, if the demand is less, there are no buyers for the thing, the price of that commodity will fall. So a similar concept can be applied on currency as well. So if let us say money is coming into any country. So money is coming into India. So in India, money can be invested only in Indian rupees. So which means if more money comes into India, the demand for Indian currency is effectively increasing, which means the rupee becomes stronger, which in technical terms means that the rupee is appreciating. So again, to just clarify this once again, if let us say the money goes into US, which means in US you cannot invest in INR, you will need dollars to invest in US. Let us say you want to invest in US properties, US shares, whatever, you need USD. So for that, the demand for USD would increase and the dollar would appreciate, or as they say, get strengthened. So what are the factors which drive exchange rates? They can be global and local factors. So what are global factors? Global factors are those which do not depend upon your country per se. So even if the Indian economy, let us say, is doing very well, but the global the global world, there is a recession, or in let us say the US is doing even better than India. In that case, money instead of coming into India might go to US. So this is a global factor which will affect the exchange rate. Similarly, policy actions. Even if in India we have no change at all, but let us say the US Federal Reserve increases the interest rates. Now what will happen? If the US rates are increased, for every dollar invested in US, people will get more return. Interest rate is basically return on the investment that is done in any country. So because people are getting more return and US is considered to be a safer destination, people will tend to invest more in US, which again means that the USD will get strengthened or appreciated. Similarly, there are local factors. Local factors would be your own export performance. Now, how does export performance affect exchange rates? If India is exporting more than it is importing, let us say China for this example, China exports more than it imports, which means when they export, they get dollars. So what is happening is there are more dollars in the Chinese economy than there are yuans. So which means that the Chinese yuan actually gets appreciated, because eventually when the dollars come into China, they will get converted into Chinese currency. So the Chinese currency is in a higher demand, because of which the currency appreciates. So this is a basic principle. Whenever any money, whether through exports or whether through investments, comes into an economy, the currency of that economy appreciates. Similarly, obviously the counterpart is that if the imports increase means that money is effectively going out of your economy, your currency would depreciate. And like I said, similarly for capital flows. So now, as far as currency fluctuations are concerned, what can any central bank do? What is the policy spectrum? On this slide, you can see that towards the left of the spectrum is an hands-off approach. Hands-off means that the central bank doesn't care about what the currency is doing. It says that we believe in free market. So like everything else, the price of the currency will be determined in the free market, and we will not interfere in what that price is doing. So most of the currencies of the Western economies like US, Euro, they all sort of follow this principle. On the right of this, you can see that the central bank can target an exchange rate, which means that the central bank of a particular country says that my economy, in my currency, $1 is equal to X number of my currency. So for instance, the Central Bank of India says that $1 is equal to, let us say, 45 rupees. This is just a hypothetical example. And they say that we will not let the currency vary from this level, and we will give all support to the currency if it moves from this level. China was accused to have something of this sort in the past. We will not get into those details. So, but what is the RBI policy? RBI says that we lie somewhere in between. We are not totally free and we are not totally targeting, but we intervene to smooth volatility, and whenever there is steep movement in exchange rates, we will come in to intervene. This is because RBI believes that when the currency fluctuates too much, there are lot of volatility in other markets, in other related markets, which is not good for the Indian economy, and hence smoothing of exchange rates is desirable, but the equilibrium price of the exchange rate will be determined in the free market. So now, as has been in the news a lot, rupee hit a 13-month low of 63.54 versus the dollar. So this is a graph of the previous 6 months, the USD INR graph, where you can see that the INR has actually depreciated from a level of around rupees 60 versus the dollar to currently rupees 63. So it is a very steep depreciation. But this is not the whole story. This is just one part of the story. Now we need to ask ourselves, has the INR depreciated against only the USD, or has it depreciated against the other major currencies as well? Now if you ask this question, you will see a very contrasting picture. This is the Euro INR graph. Again, for the past 6 months. Here you can see that the INR has actually appreciated. The INR, which was at a level of 82 6 months ago, has now actually appreciated to a level of 74. So which means we really cannot say that the INR has been depreciating. It has been depreciating only against USD and not overall. Again, just to show a comparative picture, this is a comparative graph. The orange line shows the INR versus the USD, which shows that INR has been depreciating. But if you see the other graph, it has been going in the opposite direction, which says it has actually strengthened against the euro. So what are the factors which have affected? Basically, what is happening in the economy, the global economy now, including India, is not that Indian currency is depreciating, but that the US dollar is appreciating, is becoming very, very strong. Now we need to look at the factors why US dollar is becoming that strong. So overall dollar strength arises mainly from capital flight from riskier assets. The world has not really recovered from the 2008 financial crisis, and the investors are still very wary of any investment outside of the US. They feel that whenever risk increases in the world, there is always a flight, and the investors always look for safer havens. And US is considered to be one of the most safe places because nobody expects the US government to default on its debt. So the US itself and the US government debt is considered to be very safe. So there has been an overall money flight into the US, which, like I explained earlier, causes US dollar appreciation. Secondly, the global growth rate has also not been very high. So the USP of the other emerging economies was that the difference of growth rate between the emerging economies and US was very high. So if you have an Indian economy growing at a 9% or a 10% and a US economy growing at a 1 or 2%, there is an 8% difference. But now with the Indian economy growing at, let us say, a 4% and the US growing at again 1%, the difference is not that much. So because of which, again, US makes more sense than currently, let's say, in India or a China or something else. Also, there is an expectation that the Fed might hike its rate in 2015. Now, like I explained earlier, if the Fed raises its interest rate, then again you get even better the returns in US. So there will be a further flight of capital from the entire world into the US. And as far as our own Indian currency compared to US is concerned, we still have a trade deficit. Trade deficit means we are importing more than we are exporting. So it was at an 18-month high in November. Our imports have surged 27%, and even our non-oil imports. Normally we always blame oil for our surging imports, but our non-oil imports are also up 50%. So because of all these reasons, the INR will be depreciating against the US for some foreseeable time to see. Now RBI is really caught up in a conundrum. Now what is that? INR is depreciating against the dollar, but it is appreciating against the euro and yen. So what if we want to smooth out so-called the volatility, should they try to appreciate it so that it counterbalances the dollar, or should we try to depreciate it so that it counterbalances against the euro or the yen? So the RBI really does not know that what exactly should it do so that the Indian rupee finds its equilibrium position. So another thing is that Indian rupee has been one of the most stable currencies actually. So the variation in INR has been only 1.5% versus 9.5% for other emerging market economy currencies. And also INR has outperformed because of capital inflows, and with the new government there has been reform optimism. So people feel that there'll be reforms and Indian economy will do much better than what it has been doing, because of which overall in the world, if we see, there is a higher optimism as far as India is concerned compared to other economies. Now, a question which is there everywhere, you might have heard in news, and there's been a lot of debate between the government and RBI circles as well, is which way would the RBI rates go? Would RBI cut rates? Now, the problem with this again is that the Federal Reserve is thinking of increasing its interest rates, and at the same time, if we decrease our interest rates, there will be further depreciation, because there will be lower capital flows into India, and because of which there will be a stronger dollar. So already the INR is depreciating, and the risk would be there could be a very, very steep depreciation if RBI cuts rates, especially in light of a rate increase by the Federal Reserve. So what is our prediction? Our prediction is that the RBI is not expected to cut rates more than 50 basis points for 2015. And in the long run, again, the problems of India compared to US are not expected to go away anytime soon, because the US still is going to be considered as a safe haven, and Indian exports are not really catching up with the imports as of now. So we do not see a very strong chances of the Indian rupee appreciating against the dollar. And but also because of the problems that we mentioned before, the RBI will not be able to cut rates as steeply as the government might want it to. Thank you for watching the video. Hope you liked it. Comments and suggestions are welcome. Thank you.